Thank you for tuning into ET Infra. Today we are joined by Mr. Danny Samuel, CEO IL&FS Transportation Networks Limited and Roadstar Trust. Mr. Samuel has tracked various infrastructure sectors encompassing energy, roads, and aviation for over 25 years. Thank you again for talking to us. And let me begin by asking you, Mr. Samuel, about the current status of the various SPVs of the InvITs that are there.
Sure. So the Roadstar InvIT is the InvIT that has been established by IL&FS, and it is one of the first InvITs which has been established for resolution of stressed assets of IL&FS. We initially went to the market to sell these assets, and when IL&FS realized that the value that it is getting for these assets is not fair, it then looked inwards and looked at how it can, create value for its own lenders, and how stressed assets can, realize more value, and that's how Roadstar InvIT was created. Roadstar InvIT, when it was created, it was envisaged that we'll have around 10 projects which will be transferred to Roadstar InvIT. However, in the meantime, a few projects, because of the delay, the concessions got over, and one project also got terminated. So ultimately, we ended up Roadstar InvIT with 6 projects, and all the six projects have already been acquired by Roadstar InvIT, and these total to around 8,500 crores worth of enterprise value.
What is the current InvIT market in the road sector, and how is this SPV competing with the other InvITs that are there in the market?
So InvITs is a new phenomenon, probably 3 to 5 years old in the Indian market. Today, most of the InvITs, and there are probably around 15 to 16 large InvITs in the space, and roughly around 60+% of the InvITs are in the road sector. There are a few InvITs in the telecom, power, renewable, transmission sectors which have come up, but most of the InvITs still continue to be in the road asset sector, and the InvITs can only hold operational assets. There are exceptions where they can hold a small percentage of their AUM in under construction assets where at least 50% or more is done. I think as per the latest data available, I think all InvITs put together, the AUM that they're managing is probably close to 5 lakh crores worth of assets which they are managing today. Now, this is the AUM available from public sources that is available in the public domain.
You mentioned about the existing project versus the future projects that they are managing, and the percentage of future projects being managed by these InvITs is also quite large. So, as an expert, since you have been tracking this space for a very long time, I wanted to understand, is it for an InvIT, does it make more sense to invest in only the operating infrastructure assets or the future ones, or a mix of both?
So InvITs by regulation, the SEBI InvIT regulations which are there in the market, state that InvITs by definition can only invest 80% of their AUM in operational revenue generating assets. So all of these assets should be revenue generating and they should be operational. But at the same time, there is exception provided for at least 20% of the AUM, or at best 20% of the AUM, which can be invested in under construction projects. But there again, there's a caveat that each of these under construction projects should at least be 50% complete when the InvIT is acquired. So we can't, so an InvIT by definition cannot go and bid for projects from NHAI directly for which have to be constructed. It can of course bid for a bundle of TOT, which is, TOT projects where there is no construction required. Maintenance, major maintenance, all that is fine, but there should not be construction risk that the InvIT is supposed to take, because InvITs are today considered as hybrid projects, which are somewhere between an equity and a debt, and these are hybrid securities.
So essentially, an InvIT can compete with infrastructure companies as far as bidding for the TOT projects is concerned. Am I getting it right?
Yes, they can.
They can. And do we have an example that is there, that any InvIT that has bagged a TOT project so far?
Not directly. We have examples where a developer has probably, or a fund has probably bought a TOT project and thereafter transferred it to an InvIT, but not directly, taking it over. So most of the InvITs today are, acquiring projects from other developers or from markets, including stressed assets.
Okay, all right. That's an interesting bit to know. And as a company, as IL&FS Transportation Networks, the company has already sold stake in some of the projects that it has to the InvIT. So, are you planning to sell more such projects? Some
So,
stake has been sold in the recent past. So, are you
so,
planning more such stake sales?
so what ILFS envisaged was created its own InvIT, and into which we transferred 6 operating road projects. But at this juncture, the idea is not to put more road projects into this InvIT, and we are now going ahead with listing of this InvIT. And once it's listed, or prior to listing, these units of these InvITs will also be distributed to the lenders of the respective ILFS group companies, which
Right.
had a
I
stake
was
in.
actually about to ask you this only, that the company has already received the SEBI approval to issue Roadstar InvIT. When is it expected?
So we have received approval from both the stock exchanges and SEBI for the draft placement memorandum we filed.
Right.
Now we are in the process of filing the placement memorandum. So we are awaiting feedback from SEBI on the updated DPM that we have filed. Once
Right.
we file the placement memorandum, then we'll go ahead with allotment of these units and listing. So we are looking at a time frame somewhere by end of January or early February for the listing process.
So, how many of these projects have been bundled in that one InvIT? 6 projects you said that you have sold stake, but all of them have been bundled into this one.
Yes, yes, all projects are into the same InvIT.
Into the same. And also, just broadly, I wanted to understand from you, InvIT and TOT both were introduced by the government as part of asset monetization. And NHI was in the forefront of both these schemes that the government came out with. NHI did come out with an InvIT, they did multiple rounds of TOT, which got a mixed response. I wanted to understand that going forward, do we see more of InvITs happening vis-a-vis TOT or the other way around? And if at all we have a mix, what kind of mix do you see happening in the future of these two instruments, which are major asset monetization instruments?
Right. So TOT was purely an asset monetization program that government rolled out. It had a mixed response initially, but I think there is much more response now coming since there are more InvITs in the market. InvITs were not necessarily a monetization program. InvITs were more of a structure which we copied from international markets where the REITs and InvITs are common. So we borrowed that concept here in India.
Mm.
What it allows is for developers to transfer their projects into the InvIT and roll out capital, whatever capital was stuck in those projects. It can use those capital for other new projects and take on more riskier construction stuff. At the same time, InvITs were also used by NHAI. By creating its own InvIT, it transferred a few of its projects into the InvIT and thereby, achieve the same effect of monetization of these InvITs. So with more InvITs in the market, any future, attempt at TOT and how the TOT bundles are, organized, probably you'll see that it receives more interest from the InvITs. Further so because InvITs will also have a much lower cost of capital as compared to a developer who would want to look at those projects.
When InvITs and when NHI came out with its first InvIT, it was not open for retail investors, if I'm not wrong. It was for a certain category of investors, usually the QIPs. Um, has that InvIT basket been open to the retail investors as well? And if yes, how has it benefited this instrument? And if no, what are the challenges that has happened that are holding it back?
Right. So today, as I said, there are around 14 to 15 InvITs in the market. Most of them, I think leaving aside 2 or 3 of these InvITs, most of them are actually privately placed InvITs, which means there was no allotment to retail investors, only to QIPs or funds. Now,
Mm.
the reason behind this has also been that amongst the 2 or 3 InvITs which have come into the market as a public InvIT, where it was allotment was given to retail, HNIs,
Mm.
QIPs, everybody. The positioning of those InvIT units were not that well taken by the public because I think the retail investors still are not able to grapple with the fact that InvITs are not shares, neither are these bonds. Okay, they are somewhere in between. So I think that investor education initiative has been now undertaken by SEBI through the InvIT association, through REIT associations. And once I think that information goes into the market, people realize what an InvIT is as compared to what a share is of a similar infrastructure company, then I think we'll probably have a better market for the retail investors to step in. Otherwise, they will probably not be able to grasp it fully in terms of what its potential and how is the risk weighted, return that they are going to get from an InvIT is. So I think that initiative of educating the masses is probably required first before we take it to retail.
And what does it mean for the InvIT growth story once it is open to the retail investor?
No, it should become much better. I mean, we have seen in the other markets, more established markets, say in Singapore, Canada, US,
Right,
more and more, people, retail investors have also participated in these. And there they see that the risk is much lesser in an InvIT because, these are all operating assets and, the fluctuations are not that high. And there is no risk in terms of construction or high risk projects are not taken. So to
right,
that extent, they offer a much better yield as compared to other instruments, like a fixed deposit or maybe even a bond. But at the same time, will not give you a return as compared to equities, which are, risk, which have much more risk. So if there are people who have less risk appetites, and that's why we've seen, in InvITs, most of the sovereign investors or pension funds have come,
right,
who are able to hold on to long term. At the same time, their risk appetite is not much, and they want to look at projects or look at instruments which where the risk is lesser, albeit in the form of a lower return as well on that aspect.
And one more thing I wanted to understand from you, what are the best practices that you as an InvIT or as a company have learned from the matured markets like the US and Singapore in terms of opening it up to the retail investor?
Well, I think we are still in the process. I said two or three projects, two or three InvITs have gone retail, including a few REITs as well. Okay, so
Mm,
REITs and InvITs are similar. REITs are on the real estate side, InvITs are on the infrastructure side.
right,
But more education and more information flow needs to go to the retail investors for them to understand this product and this better, so that they can take a call which is more informed call in terms of buying these InvITs or investing into these InvITs. When they look at InvITs and compare it to stocks or shares, and with that same frame of mind, if they come and invest into InvITs, they
right.
will be later in for a shock because they know that InvITs are not going to give super normal returns, but at the same time they give more stable returns.
Right. And one last question before I actually let you go is in terms of InvIT, what is the future of InvIT look like in the infrastructure space? And what you said that operational projects are InvITs are actually holding on to the operational projects that are there. What happens to the brownfield projects? What happened if the government plans maybe expansion of the brownfield projects or any sort of work on the brownfield project that are there? Will they also be lucrative for an InvIT?
So as of today, the regulations won't permit us to look at brownfield projects and
Mm,
take over projects which are under construction. So world over, I think the phenomenon has been in terms of REITs and REITs also. They had incubation trusts, which will actually come in place, start a project, take on more risky projects. And
right,
once the projects are operational and we know that this is the revenue is set, then it is easier for an InvIT to go ahead and acquire those projects. The whole idea is that though InvITs want growth, but at the same time, InvITs are risk averse to taking on a much higher, much riskier projects in terms of starting it and completing it and taking on the whole gamut of risk of developing those projects. I think it is
right,
probably best in the collective wisdom. It's understood that it's best left to the developers to take that risk, and thereafter they can always transfer it or sell it to an InvIT, which is there in the market.
right. I have actually asked you a lot of questions. Anything else that you would want to add, or something that I have probably skipped asking you?
I think you probably covered most of what was there.
Right, right. Thank you, Mr. Samuel, for talking to us. Thank you for this insight into the InvIT world. Thanks a lot.
Thank you. It was a pleasure.